Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that sideways action that has been basically continuing since last Friday when I was mentioning that we do have a possible mean reversion setup. Guys, basically nothing has changed. Price has just gone sideways. That has put a little bit of weakness into a lot of these altcoins, though, as doubts continue to rise about the security of the market with earnings season on the horizon here. So many companies are going to be declaring their earnings, and if it's worse than expected, then the market could take a little dumpy dump. Guys, also we have big news at the end of this week. Of course, there's a bunch of stuff about home sales and durable goods and all of that stuff, but really the main event is going to be Thursday when there's the GDP report and we can find out, are we really in a recession or not, right? That kind of information. And then also on Friday, when we get that PCE data, of course, the core PCE is that data that the Fed uses primarily in their decision making. And then all the other inflation indicators and reports, go along with it and either take away from it or prop it up a little bit more. And so we are looking for these key pieces of information. Now, guys, let's just jump straight into the charts because in 5 minutes we will have the 6-hour chart closing. And currently we are still set up for that possible mean reversion. We did get a bit of a flavor of it right here. You can see this wick. We got a nice bounce from this low right here up here, which would have been, almost 3%, right? It's 3% from this low at least. And so if you were just doing some type of scalping, then probably you had a nice little payday from that. But the EMAs are still pointed down, and we're still waiting for them to flatten out. Now, the cool thing is that we do continue to be supported by the 200 EMA on the 6-hour, and also the 200 SMA is providing further support. That's why I still believe that this mean reversion is going to play out. And what does that, what would that look like? Well, let me show you. I would expect something similar to this, where we just have a little bit of a falling wedge here. Maybe we could even dip down one more time. Who knows, right? And then get a little pump, sort of like what we're doing right now, and eventually break out of this wedge, which it looks like we're doing at this moment. This isn't an exact science. We could conclude that wick, and then maybe we're still in this wedge. But anyway, we're going to start putting in some type of a rounded bottom and then eventually pump up. Now, we really do need to get above 29,000 and, pretty squarely above 30,000 for this ship to turn around. But just in terms of trying to capture this liquidity up here, I think 29,500 to 30,000 isn't unreasonable, assuming that we do grab it. Now, there's a little bit of liquidity up here, so it could be a shorter mean reversion if the markets are weak, but that remains to be seen. Let's just get this off the screen. Let's take a look at what the previous 6-hour analysis was. This is the old one, guys. You can see we've just been going sideways, barely hanging on to that volatility pivot that we needed to. But look, guys, I told you don't fade the volatility pivot, okay? Like Alpha Commission is delivering you the alpha, and guys, look how we've been holding that pivot, and we've just been maintaining our position. And then all of these other levels, they basically support the pivot if we have additional ones underneath us, and if we're looking to the upside. But we just really haven't been able to capture them, and you can see how that would bring us to the middle of this squeeze that has now formed. It's been multiple candles, and you can see that's just how these levels are leading you to the right spot. Okay, and so that we're getting this push right now, that is important. Now let's go to the updated version because I do have a new one. And you can see that we will continue to hold our momentum above 27,333. Pardon me. We'll hold our volatility bias to the upside above 27,330, and we're going to hold our momentum above 27,000. Let's just say 400. Okay, we don't want to dip below this critical area there. And then the bears are going to regain control if we do fall below 27,500. So we do want to remain above that level. Okay, so 27,500 is an important level for us right now. And then, we might bump our head on this neutral point of control, which corresponds with the 20 EMA here, somewhere around 28,000, and then put in that, that bit of an accumulation which then could potentially send us up here, where you can see my target actually lines up with the bullish control zone, the new bullish control zone on the 6 hour. So that is a good confluence. It does suggest that we've got it, approximately right in the play that we're looking for here. So guys, that's the 6 hour for you. Now let's go ahead and jump over to the daily, get you a nice update on the daily. And first of all, we can see how the daily has been moving. And you can see this is an older one, okay? So it's just been multiple days since then. And we were just underneath the hold momentum level. And we've just been dropping ever since, right? Underneath the neutral point of control. But the bears really didn't get in control. Let's take a look at the update that I made to that one. And, well, let's look at the older. Well, this is the new one, it looks like. Where's the older one? Doot. Okay, this is the previous one that I had then, and you can see that we didn't really we weren't really able to capture that hold momentum until basically today, since the previous time I made a daily update. And then, of course, we do have, gosh, just have dailies all over the place. Okay, here's the new one. Yeah, here's the new one, guys. These are the critical levels that we have to hold on to. And you can see our hold momentum is at 27,515, very similar to that 6 hour, but our volatility pivot is a bit higher. It's 27,800. And this is really what I wanted to show off on how those changes took place, because if we look at the volatility pivot alone, right, 27,800 is our new target. That's really within striking reach. We're at 27,630 right now in price. And guys, you can see that previously it was 30,400, and then it came down to basically 29,000. And then now finally it's within this striking distance. And so I just wanted to show you how these volatility pivots change over time, and how going sideways allows the chart to reset. Okay, so I didn't mean to throw all of that at you. Again, these are the new levels, and we need to basically hold above 27,515. Bears don't get in control unless we drop below 26,450. So we could do one wick down there, one scary wick, and then push back up. But we'd want to hold above the volatility pivot, which is currently at 27,800. And then getting above that neutral point of control at 28,325, you can see that would be the squeeze, right? That 10 and 20 squeeze on the EMAs on the daily, which would then allow us to get into general continuation to the upside and even add momentum should we pass this point of resistance somewhere around 29,000. And that could allow us to potentially grab the bullish control zone at 30,700. So these things are setting up like dominoes, and I've been saying the same thing since last week. Okay, guys. So yes, I had some, bearish macro perspective on the weekend, but that was just to warn you of a potential macro setup. My overall macro setup is still bullish. As I told you, the higher time frames are still bullish. Do not be a perma bear. Do not be a perma bull. Just be a clever little alpha monkey. And guys, when you're trading these coins, remember that ever since 2022 or whatever, like, we've been in a macro downtrend overall. And so don't be loyal to these coins. Take your profits whenever you can. You don't have to be loyal to these coins. They're not going to be loyal to you. Put food on your table. And guys, just remember, okay, like, risk management is the name of the game until we have a really official bull run. You just want to keep your money and add a little bit to your money, okay? The worst thing that you could do is lose money in a bear market, because every dollar that you that you invest in a coin in a bear market will like 10x, right, at the top of the next bull market at least, okay? And so every dollar that you waste in a bear market, it's a travesty, okay? Yeah, at the top of a bull market, you can throw money around left and right, right? You can have nice dinners, all of that stuff, because you're just you're basically maxed out anyway, okay? Every dollar only has the potential to crash that you keep into coins at the top of the market. But at the bottom of the market, if you're losing money, then you're going to potentially have problems, when it comes into DCAing in and riding the wave up. Because again, like if you lose $100 now, it's like you're losing $1,000 at the top of the market. Okay, so I just want to keep that perspective. But guys, don't really have much to add today. Just wanted to give you some critical levels. It does look like the 6 hour has closed, which is basically what I was stalling for time for. So let's go over to the 6 hour chart again and just take a look at our 6 hour analysis there. We can see that we did close above the bearish control zone. And so even if we have a little bit of a pullback, that doesn't really matter. We do have a little bit of liquidity here, but as long as we maintain above that basically 27,500, then we're going to be out of the bearish control zone, which we've kind of been stuck in for a while. And so this is a good sign that we could potentially push up to this $28,000 level, or at least, the 20 EMA somewhere around 27,500, 27,000, pardon me, 27,900. Guys, that was your alpha for the day. Stay safe and happy trading.